Two men walk into the same dealership. Same truck. Same job. Same $40,000 paycheck. Mike drives off paying $558 a month. Dave pays $703 for the identical truck. Nothing about these two men is different, except a 3-digit number neither of them was ever shown. By the end of this, you'll know exactly what that number is charging you on your car, your card, your house, and on things that aren't even loans. We're going to climb a ladder today, 5 rungs, from a 500 score at the bottom to an 800 score at the top. On every rung, I'll show you the real price of being on it, in real dollars, pulled straight from the lender's own numbers, not my opinion. Your car sits on this ladder. So does your credit card, your house, and one cost most people would swear has nothing to do with credit at all. This is the first rung, the number itself, what it actually is, and why the system trusts it more than it trusts you. It's your credit score, a single number, 3 digits, built mostly from whether you've paid past bills on time and how much you currently owe. And here's the strange part. Most people can't even tell you which tier they're in. Yet that number quietly sets the price of nearly everything they borrow. As of late 2025, the average American score is 714. It actually slipped that year, the first drop in over a decade, partly because paused student loan misses started hitting credit files again. About 15% of people sit in the poor range. 70% are good or better. The system never asks who you are or what kind of year you've had. It reads the number and it prices you. Mike sits at 780. Dave sits at 580. 200 points apart. Same income, same car, different price. The system doesn't see you. It sees your number. Rung 2, the car. Back to that dealership. Same $35,000 truck. Same 72-month loan, same day. The only thing the lender changes is the interest rate, and it changes it based on one thing. Here are the lender's own average rates by tier. These are Experian's numbers, the people who keep the score. At Mike's score, the average new car rate is 4.66%. At Dave's, it's 13%. Same truck, same loan, same down payment. Only the rate moved. So Mike's payment comes out to $558 a month. Dave's is $703. $145 a month for nothing extra. Not a better truck, not a longer warranty. Just a lower number on a report the salesman pulled in 15 seconds while Dave was looking at floor mats. Stretch that across the whole loan, and Dave pays about $10,400 more in interest than Mike for the identical truck. That's a kitchen remodel. That's most of a year of college. Gone, quietly, to the gap between two numbers. And the bottom of this ladder is worse. A deep subprime buyer pays $759 a month, almost $15,000 in extra interest on that exact same truck. Same income, same car, different price. The system doesn't see you, it sees your number. Rung 3, the credit card. And this one is sneaky, because the headline rate looks the same for everybody. The Federal Reserve says the average card charges about 21%, but that average hides the real game. The game is the margin. Every card rate is built the same way, a base rate that everybody shares. It moves with the Federal Reserve, plus a margin the bank picks just for you and locks in when you open the account. Mike and Dave start from the identical base. The margin is where they split. And the Boston Fed actually measured it. Borrowers with excellent scores get a margin of about 11 to 12 points over that base. Borrowers with low scores, 19 to 20. That's roughly an 8-point gap, bolted onto the same dollar, and it barely moves even when the Fed cuts rates. Dave doesn't get the cheap money. He never did. Put simply, on every $1,000 Dave carries, he pays roughly $80 more a year than Mike, forever, for borrowing the very same dollar. Same income, same dollar, different price. Rung 4 is the big one, the house. This is where a fraction of a percent stops being small. Same $300,000 home, same 30-year loan, same 20% down. Only the score moves. These are FICO's own numbers, straight from their loan calculator. Move from the top tier to the bottom, and the rate climbs just enough to add about $173 to the monthly payment. It sounds survivable, $173. But stretch it over 360 payments, and it becomes roughly $62,000 in extra interest over the life of the loan. And notice the shape of the penalty. It isn't a smooth slope. It's stacked at the bottom. Climbing from very good to excellent saves you almost nothing. But slipping from good down into the low tiers, that's where the price explodes. The people who can least afford the hit take the biggest one. $62,000 on one house. That's most of a year of Mike's take-home pay, handed over not for a bigger home, not for a better street, not for a single extra square foot, for a lower number on a report Dave will probably never read, attached to a loan he'll spend 30 years paying. He'll make that payment a little tense every month and never quite know why it's heavier than his neighbor's. Same income, same house, different price. The system doesn't see you. It sees your number. Rung 5 is the one nobody warns you about, because it isn't even a loan. It's your car insurance. You're not borrowing a cent. You're buying the exact same coverage. And in most states, the company quietly checks a version of your credit before it sets your price. The regulators even have a name for it, a credit-based insurance score. It's built from your credit file, but run through a different formula, and it can decide your premium before anyone looks at your driving. Bankrate's 2025 study found drivers with poor credit pay about 76% more for full coverage than drivers with good credit, roughly $2,000 more every single year for identical coverage and an identical clean record. Not once, every year you keep the policy. The Federal Trade Commission confirmed the link between credit and claims years ago, which is how insurers justify it. 4 states, California, Hawaii, Massachusetts, and Michigan, decided it wasn't fair and banned the practice outright. Everywhere else, your number is sitting quietly inside the quote. And here's the quiet cruelty of the whole ladder. The lower your number, the more everything costs. The car, the card, the house, the insurance, which leaves less money to pay things off on time, which keeps the number low. The penalty funds itself. The system charges the most to the exact people with the least room to absorb it, and then calls them the risky ones. Same income, same risk on the road, different price. The system doesn't see you. It sees your number. Now stack the whole ladder. Take 5 cars across a working life. Most of us finance roughly that many, at Dave's rate instead of Mike's. About $52,000 in extra interest. Add 1 mortgage, another $62,000. That alone is $114,000. And we haven't touched the credit cards, the personal loans, or the $2,000 a year in insurance that never stops while the policy runs. Add those in and it climbs higher still. Conservatively, and this is a modeled estimate, the math is right there on screen. The gap between Dave's number and Mike's number is north of $110,000 over a lifetime. Same jobs, same paychecks. One of them just quietly handed a small fortune to the gap between 2 3-digit numbers. So what is this number, really? It isn't a grade on your character. You can be honest, hard-working, and good for the money, lose a job for 6 months, miss a few payments in the worst year of your life, and wear a low number for years after you've recovered. The score doesn't know the story. It's not a verdict on who you are. It's a price tag. The system reads it and charges accordingly, and it feeds on itself. The higher price makes the number harder to fix, which keeps the price high. But here's the part the lenders would rather you didn't sit with. Of every number in this video, the inflation rate, the Fed's base rate, even your own salary, this is the one you can actually move. You can't vote inflation down. You can't negotiate the prime rate. But this number you can rebuild, month by month, on time. It's the rare price tag you're allowed to rewrite. Which brings us back to that dealership. 2 men, the same truck, $145 a month apart. Mike never sees the number working for him. Dave never sees it working against him. Now you've seen it. The question isn't whether the number is fair. The question is what yours is costing you. Right now, on everything, and whether you're going to leave it where it sits. The system already knows your number. The only question left is whether you do.